Hey traders, Clifford back with another video on how to trade the index. So today I wanted to start a new series on how to trade the Commitment of Traders report and how this can benefit you in your trading. So with that being said, let's get started. Now, if you're new to trading and you've never heard of the Commitment of Traders before, then you definitely want to watch this video because it can really add a serious uh, trading tool to your arsenal. And, of course, in my opinion, successful trading is all about having an edge, and these tools give us edges, right? All right. So, I'm going to make this probably a three-part series because there's a lot of information to cover on the commitment of traders. So, in part one today, we'll just talk about what it is and how you can see this information in TradingView. Part two, we'll talk about how to use it and what kind of strategies you can develop on how to use this information, different strategies. And in part three, we'll go over some actual trade examples, maybe. Okay. All right. So let's start with the basics. Commitment of traders. What is it exactly? So there's a website here called the Commodity Futures Trading Commission, and what this is basically they are reporting all of the futures market positioning every week. Okay, these are the institutional traders, the big banks, the financial institutions, the commercial traders, right? All these, you know, really large positioning in the markets, right? And so what they do is they have this report called the Commitment of Traders Report, and it's released every Friday at around 3:30 p.m. But it shows you what positioning the traders had on Tuesday. So there's a lag. So you get the data on Friday, but it shows you what the traders did on Tuesday. I believe that's pretty much the basics of that. And back in the old days, you used to have to go to this website to get the data, right? So you would go to like, which exchange you want the data from. So like here, let's say Chicago CME, Mercantile Exchange, futures and options. Now, this is the information in the futures and options market. So if you're a Forex trader, if you're a CFD trader, you can still use this information because even though you're not a futures trader, this data moves the market, right? So here you go, CME. So I would go to like, back in the old days, you would click here, like short format and see all the reports, right? Now there's three types of traders in this report: the non-commercial, the commercial, and the non-reportable. We'll talk about those later. But basically what I want you to just see here before I close this website, because nowadays we have indicators that show all this. Um, let's say you were trading, Bitcoin and you wanted to see positioning. You see this 24,000 contracts long, 26,000 contracts short, right? And stuff like that. Or let's say you're trading the E-mini S&P 500 or you're an S&P trader, here you go, 214,000 something contracts long, 339,000 contracts short, right? All right. So that's pretty much the government website where they release the data. So now we can close that because, you know, technology nowadays got everything, right? All right, so on to TradingView. What you want to do is download this indicator. Now, I don't really use indicators in my trading, but this one I do use because it shows positioning. It doesn't give me buy and sell signals like that. It's a report indicator, so I do use this one. Um, so basically, you go to search and you type in COT data, and you should see this guy here, Magic Eanes. This is the one that I found, and you click that, right? Indicators loaded. Okay. Now, what you want to do is, I mean, you could use it like this, but I think it's kind of hard to see like this. So I did some tweaks. Let me show you what I did. Um, I go to, and this is the indicator here, COT Bushi, whoever this creator of the indicator is. Thank you so much for creating this. You're amazing. Okay, COT Bushi. Shout out to him or whoever that was. Um, so here you go to settings, right? And you see all these settings: commercials, long, short, net, long, large spec. Now on the old report, the government data report, it's commercials, non-commercials, and non-reportables. But the indicator makes it actually easier. Commercials, long speculators, that's the non-commercials. We'll talk about that later. And then small specs, non-reportable. And what I do is just this. I take this off. I take this off. I take this off. Take this off. Take this off. Take this off. All I want to see is called the net positioning. I'll explain why later. But for now, if I were you, to make it easy, just use net positioning. Commercials. So commercials net, large spec net, small specs net. That's all you need. Okay, and then what I do is I like to change it to a histogram over here. Okay, put it as a histogram so I could see it better. That's just me personally. You could do whatever you want, but I think it's pretty easy to do that. Um, I like to make it a little bit thicker here, so I'll use a thicker line here, thicker line here, thicker line here. And finally, this is personal preference. I kind of like to see commercials red. I like to see my large spec blue, and I like to see my small spec yellow. Again, that's just me, you know, that's my own thing. So, but again, if you want to do that, you could do it too. Some traders like different colors. Those are the ones I use. Some other traders use these same colors just to kind of make it easy. I think blue means kind of like easy, red, yellow system, blue, red, yellow, right? Okay, enough of that. So there you go. Then you hit OK. And that's it. Now, and then later I would even create a template, and save this for you. So that way, you could just like go up here and you have your templates and you just hit, like I just hit this and boom, I get it right away, right? Because I already saved it as a template. So there you go. COT-Bushi, right? All right, so that's done. Now, what exactly are we looking at, right? Because, it's a little confusing if you've never seen this stuff before, right? So basically, this is the futures market positioning. So this positioning is only applied to futures markets. So, example, yeah, stock indexes, right? So you got the ES, that's the E-mini S&P, NQ, NASDAQ 100, Russell 2000, RTY. Okay. So if you trade any of these indexes, let's say, I don't know, in another way that is not the futures market, you can still use this data. Let's say you're a Forex trader, right? For example, I'm looking at the Euro USD. Do not put the data under the Euro USD. Go to the Euro futures contract, then load the data because this is what the the institutional positioning you want to see. You see, if I switch it to this Euro USD, it's a little. I mean, sometimes it'll translate correctly, but I've noticed sometimes it gives errors. So just be careful with that. Um, let's say you're I don't know, a bond guy. Like you're looking at bonds, like the 10-year futures, right? Hit your indicator and boom. All right. So that's pretty much all the markets it applies to. Even if you're a Bitcoin trader, you trade, I don't know, you trade crypto, right? And you want to know what the big guys, what the big institutions are doing with Bitcoin. You could hit the BTC, right? This is the futures, Bitcoin futures, not the Bitcoin what do you call this? Crypto cash market, but the futures market. Hit the indicator, right? And you see what the big guys are doing with Bitcoin. You see if okay, that's actually matching today. That's good. The other day it wasn't matching. So that I only use it for the futures contracts to see what's happening in the futures market. Um, all right, so that's how that works. And if you really want more information on all the markets it tracks, you could just go to their website, Commitment of Traders, and see all the different markets it tracks. So finally, how do we use it, right? Like, what is all this? Okay, so back to that. ES, right? E-mini S&P 500. So what this is basically the large speculators, right? They are basically like your hedge funds, right? Um, your smart money, you can call them, right? Your big banks, institutions, they're pushing the market basically. Large speculators. That's why they call them the large specs. Hedge funds, banks, big contracts. Because if you have a certain size positioning, The reason we get this report is it must be reported if your positioning is big enough. Okay. Um, Same thing with the euro, right? Big banks, Forex banks, right? Financial institutions, they're pushing the market. Okay, so that's the blue. So the blue is the small, oh, sorry, the large speculators. I almost got confused there. All right, the red, the commercials. This is different. These are the guys, I believe they call them hedgers. So like they're more kind of like trying to protect themselves from volatility. An example is oh, I don't know, let's go to one of the grain markets, right? Like here's the corn market. Okay. So if the commercials are buying corn, sorry, the large speculators are buying corn, right? Like see, oh, and by the way, the zero line, that's like neutral. Anything above the zero line is long. Anything below the zero line is short. That's why you see the positive and negative here. Positive positioning, negative positioning, right? So the commercials, like, I don't know, here's an example. Let's say you're a farmer and you want to protect your crops from, you know, a serious problem in the grain, in the weather markets or something like that. He would short, the farmer might protect his positioning by shorting the corn market even though the speculators are long, so that protects him if prices go down because he wants to make sure that if prices go down he doesn't lose money on his crops, right? That's kind of like a positioning there. If it's the S&P 500, these guys, maybe they want the commercials might want to hedge the market, right? They want to protect themselves in case the protect part of the portfolio in case the market crashes or something. Who knows, right? So that's what the commercials are doing. Basically, you don't care about the commercials. What you want to watch is the large speculators. Now, the small specs, the non-reportable, they're just there. They're kind of like small traders, like the retail traders like us, but you don't really want to pay attention to them because most of the time they're wrong. um, that's what I've read over the years on the small specs. Sorry, on the small specs. Okay, so that is pretty much it. The basics in a nutshell on what the COT is, um, how the three how the three report how the report is released every Friday. So that means, for example, right? So this one here, you see June 11th, right? June 18th. Okay, this was the recent one. So this that Friday, last Friday, when this was released, it's showing you what they did on Tuesday. Okay. So this coming Friday, if the report is released, it'll show you what they did yesterday. Okay. So and in part two, we'll talk more about how to use this information. But basically, um, just to give you an idea, so like you see how here they got 36,000 contracts long, but the week before they had 31,000 contracts long. Well, and then the week before that they had 22,000 contracts long. So what are they doing? They're increasing their long positioning, right? And you want to know that. I mean, because do you really want to short necessarily if, institutions just jump the gun with 20,000 long positions? I mean, do you want to go in short? You might not. I mean, you might still want to try and short it, right? But, or if you're trading the euro, right? Let's go to the euro, you know, um, what's an example here? Well, we'll look at this one. I was watching this one the other day. The Canadian dollar, right? Okay, so here they were really short the Canadian dollar. So if you're thinking about shorting the Canadian dollar, you might not want to do that because they're already massively short. Look at that, 150,000 short positions, right? So you might want to use that information there. Um, but we'll talk more about strategies later. Um, but to give you one more idea, like let's say you're a bond trader and you want to know when they're trading the trend, right? Let's say you're a trend follower and you see that over here they were neutral, right? Um, if you see they're neutral at 0, and then you see them start to add positioning, right? Um, you see them add more positioning, that could give you more confidence that the market's going to continue to follow the trend. Um, so that's kind of like some basics there. But again, we'll talk more about this in part 2. So that's about it for this video. If you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And as always, my friends, trade what you see on the charts. Trade well.